at that point, on the day of closing, it went into effect, right? And they immediately saw a over $200,000 gain in the NOI. And so if you take that on a 6% cap rate, like you said, that is over $3 million in value on day one. So this property was a $21 million purchase price, just over $100,000 per door. Really like the entry price. And then you add in the tax abatement strategy, and you have roughly about a $24 million evaluation on day one.
Welcome to the Peak Profits Podcast, your guide to maximizing returns in passive real estate investing. Hosted by Bryan Morris and Chris Ward of 7 Peak Capital, we dive into conversations with industry experts, sharing insights, strategies, and stories to elevate your investment portfolio. Whether you're a seasoned investor or just starting out, this podcast is designed to give you the edge for financial freedom. Get ready to unlock new opportunities, discover the secrets of successful investing, and take your passive real estate investments to the next level. Let's get started and reach those peak profits together.
Hello and welcome back to Peak Profits. Today, Bryan and I, another slight change for what you're typically used to. We're actually extremely excited to talk about the first deal of 2025 that closed on the 31st of January. Bryan, how are you doing?
I am doing good. I'm excited about this deal. I'm excited to hop on and talk a little bit about it and why we're excited about this first opportunity that we invested in 2025.
Yeah, so the property that we are talking about today is Azur Apartments. It's a 208 unit in Waco, Texas. Bryan, we talk a lot about, and when we're on speaking with other industry professionals, we talk a lot about kind of the due diligence process that you ultimately have to go through. Do you want to start us all the way at the beginning of that and kind of talk about the due diligence we went through, the operator that we ultimately selected that is managing and operating this property, and then we'll kind of dig into a little bit more of the details as we go through that.
Yeah, for sure. We were brought this opportunity, I believe it was late October, potentially early November in 2024. And we were debating on whether we wanted to invest in this deal. And we had to decide, over the course of the next couple of weeks. Ultimately, to start the process, we went to one of our partners who actually invested with Post Real Estate Group before and had really high things to say about not only the group, but his investment previously. So obviously that was a good start. But then in addition to that, he actually worked with a group of high net worth individuals that are in a mastermind that he's part of that have a handful of members that have invested time and time again with Post Real Estate Group. So we think that's super important because not only kind of what Post or some of these sponsors will put out online or put on their website, right? It really comes directly from the limited partners and the investors themselves. And if they have positive reviews and good things to say about operators and sponsors that they've invested with in the past, I think that goes even farther because it says a lot about not only their communication style, right, but how efficiently and effectively they're running the property. And ultimately, what are they projecting versus what is actually happening once the investment closes, right? Because in this industry, right, it's completely too different. The work really starts when you close on the properties. Yeah, we were brought this deal, and I think between our due diligence, we had our due diligence checklist, which we do for every sponsor and operator, which is over 100 questions, where we truly vet out really their background, the owners of the sponsor and who's running the company's background, and kind of their track record, what they've done in the past. But like I mentioned, in addition to that, and a little bit about the company, we want to go to the investors and limited partners who have invested with them before. So between all of that, we've heard really good things. So we started to dig into the specifics of the deal a little bit more from there.
Yeah, I think the common phrase is you're almost betting on the jockey, not the horse, right? So this was one where we really had to dig into the jockey. We haven't personally invested with these people prior to this, but we, like you said, we were filled with a lot of confidence from our due diligence checklist, from our network, hearing multiple people sing their praises. Again, that helped us build the trust ultimately. And the fact that they've done over 145 different acquisitions, they've gone full cycle in 32 of those. They've achieved kind of over 32% IRR, almost 33% IRR on average, right? Those numbers speak for themselves. So, but like you said, that's all great on paper. It's ultimately seeing and digging into the details of that. So I think we were immediately kind of pretty comfortable with what we saw from our due diligence checklist, the work that we were going through. So let's talk a little bit about the business plan. So the property itself, as I mentioned before, is a 208 unit in Waco, Texas. Location of this is fantastic because it sits right between Dallas, Houston, and Austin as well. So ultimately, there's a great little corridor of large MSAs, and Waco sits almost directly in between them. I think what we typically see and hear from people is around value add, right? Like that's a very common way and a very common thing for operators to position is ultimately value add. And this one was slightly different from some of the other properties that we've done due diligence on as a value add perspective, because typically we see that in terms of renovating units and increasing rents. But this one was not focused on renovating units and increasing and driving up rents. It was actually leveraging a tax abatement strategy. And what we found really, really good about the tax abatement strategy is that on day one of closing, they were able to save over $200,000 annually. And that equated to over $3 million in total of actually the property value. And that's from working with the local state, the authorities, ultimately to support the housing crisis and providing continued affordable housing. So what that means is that they've ultimately reduced the tax bill on the property, which is one of the largest expenses, and therefore have increased the NOI, like I said, by over $200,000 annually. And that's different to what we've seen in some of the other deals that have come across our desk, right?
Yeah, it's another type of strategy to your point, and it's still a value add. It's just about how are you adding that value and how are you at the end of the day increasing that net operating income, right? And there's two ways that you could do that. It's either increasing the income or it's decreasing the expenses. And in this case, you're decreasing the largest expense, which is your property tax, which, as you mentioned, was a little over $400,000, and they received a 50% tax abatement, which at that point on the day of closing, it went into effect, right? And they immediately saw a over $200,000 gain in the NOI. And so if you take that on a 6% cap rate, like you said, that is over $3 million in value on day one. This property was a $21 million purchase price, just over $100,000 per door. Really like the entry price. And then you add in the tax abatement strategy, and you have roughly about a $24 million evaluation on day one, right? On roughly about $16.7 million of debt, right? So you have that equity between the debt of 16 and change and the value today about 24 million, right? And then over the course of the next 5 years, which is the projected hold of this project, we will continue to increase the NOI by bringing rents up to market. So some of the rents today are around where market could be, right? But from what we've seen in the Waco market, there's still strong growth, right? There's minimal supply coming online in the coming years. I saw in the underwriting and in the reporting, there is a little over 400 units coming on this year. But in 2026, there's only 55 units coming on, and it drops off drastically. So we're very excited about kind of where the occupancy rate is today, which is mid 90s. It's 94%. And to play off that as well, when you're talking about value adding units, right, that generally means displacing tenants because you need to get into the unit to upgrade it, redo the flooring, potentially kitchen cabinets and new appliances, right? You can't have someone living in those units while you flip them over the course of several weeks. And so with this tax abatement strategy, we're actually able to keep the occupancy levels at a very high level with just mid 90s, but get that immediate boost in net operating income, which is a huge benefit and a very low risk when it comes to increase in NOI. One thing I want to also add here when I'm looking at this deck is we went in at a going cap rate of 6.2. And if you take into the tax abatement strategy, where the NOI would be after the tax abatement, it's 6.98. So you're talking about a 7% cap rate for a market in Texas, which is very, very good, where typically you're seeing cap rates in the fives, right? So we really like our entry point. We really like where the NOI is now at the day of close and kind of what this business plan looks like for the next 5 years.
Yeah, and something else to add to that is a lot of that stuff was in the underwriting, right? So as we were going through our due diligence, it's really digging into the underwriting, understanding how conservative they were with their underwriting. I do really want to shout out the interest call out here, right? Like they were able to underwrite this and hit the interest rate essentially on the nose, right? So again, to me, that's such a huge thing because the interest rates fluctuate all the time and you ultimately can't lock that interest rate right until the point of closing. And they were able to hit that interest rate on the nose. So that, again, when you talk about achieving hurdles and achieving your projections, that's a day one tick in the box, right? To be able to say, this is what we underwrote. This is everything that we based all of these projections and what we were showing you on. And here we are, day one, closing on the deal. And we've hit the first thing right on the nose. And again, that brought, I think, a big smile to both of our faces when that email came through that this is ultimately what the interest rate for the loan was. And I can see you smiling there, Brian, as well, because I think that was your reaction the same way it was mine.
Well, I think to add to that point is just working with an experienced partner like Post Real Estate Group that's been in business since 2007, has done 145 acquisitions since they've started in multifamily, over $4 billion of assets, right? This is something that they are comfortable with, and they understand the volatility that could happen in the 10-year treasury, which essentially correlates to what the interest rates are doing. To add on to your point there, when they got this property under contract with LOI and then the PSA, purchase and sale agreement, it was in the fall. And if you look at the 10-year treasury in September, it was in the threes. And now, if you looked at it throughout the fall and going into the winter, it climbed up dramatically. So one could assume that the interest rate that they underwrote at 5.7 could be significantly higher in the mid sixes when they locked the rate in towards the end of January. But we were able to still get a 5.71 interest rate locked at the day of close, which was just incredible by the team. So obviously, very, very nice job. We're super excited that came in at 5.71, just as the underwriting projected, and everything has gone very smoothly from contracting to closing the business.
Yeah, so beyond obviously the overall interest rate, they're also experts in this market, right? So their track record of the 32 full cycle deals, the 145 assets that they've ultimately acquired, they do already own 2 additional assets in the Waco market, this being their third. All of those assets are within just over a mile of each other. So again, when we talk about the underwriting, they can look at their current assets, they can truly understand the market. This is actually also going to give them the opportunity to control some of the market as well, with such a large presence there, driving up potentially what is the average market rent. The other thing is they were already property managers of this unit before they purchased it, which is another great thing because that means that they were already able to go in there and understand, like we said, what is that tenant base like? Do they have any loss to lease, right? Like not having to go through and comb through somebody else's financials. They are managing a lot of that already themselves. So they're probably looking at their own processes that they've already begun operating there. And they're leveraging that now to improve that even more so now that they've taken over the apartment. But that was another thing that really kind of stuck out to us as we were going through this due diligence is they truly understand what they're doing in this market. They're underwriting it based on the experiences they have with Sandstone and Avila, and now ultimately adding this third one to the table as well. And ultimately,
I was just going to say, if you look at Sandstone, they acquired that in 2022. They acquired Avila in 2023, and then at the end of 2024, they got Azure in contract, and they acquired it just at the beginning of 2025. And all 3 of those apartment complexes are within a 1.5 mile radius of each other. So not only the Waco MSA, but like a very tight circle within that market around where these properties are situated. And that only also helps, economies of scale when it talk to property management, right? Because you can have a full team on site that not only oversees Azure, but oversees Sandstone and Avila, and have all the necessary pieces in place from maintenance, property management, asset management, right? Like you're able to potentially better, when you talk about expenses, better value the expenses and minimize some of those that are potentially currently on Azure as well, right? If you have a full property management team on site today and this is their expense cost X, right? But if you took a look at what Post is doing and they have a team already in place, right, you can also look at potentially minimizing additional expenses that will also increase the NOI. So I think that stuff goes a long way, and things that when you're looking at these investments and what they have in the area, it's strong. And then one other thing I wanted to mention on that point is Sandstone and Avila's today. Sandstone's at 93% occupancy, Avila's at 97% occupancy. So they've managed these obviously for 2 to 3 years, and they are achieving very high occupancy levels, very strong rents for those. So again, to your point, I think that just goes to show the confidence in the operator and in that specific market that they're operating in. They have boots on the ground, they have the teams in place, and this should be a very seamless takeover process.
I agree, and I think we would be remiss not to talk about ultimately the returns, right? Like from an investor perspective, also the returns are good returns. They are what you would at least expect to see with an asset like this. They weren't over projecting, right? It was very, very in line with what you would expect to see. And the reason why I personally like that is to follow the largest, the shiniest numbers that may be out there doesn't always truly paint the picture of what you will ultimately get, right? Like if you just went for the shiniest object every single time, you're not always going to achieve what that is. Whereas I feel like they have done a great job in being realistic with their expectations and have proven time and time again that they actually exceed those expectations. So when I look at this and I see that the equity multiple is around 2x equity multiple, there's a preferred return of 8%, there is a 85-15% split, right? All of those things sit there and go, well, as and when they continue to overachieve in this project, hopefully, me as an investor directly and any of the other investors and limited partners that are part of this are going to continue to be the benefactors of that, as well as Post, which is very, very common, right, in these investments. But they were very, very realistic with how they were approaching that. And I think, again, it's very, very important to look at not necessarily just the shiniest numbers that are out there, but also understanding truly what that means and how that's going to drive them to do the right thing so that everybody's in the same kind of alignment, right? This is how we want this to succeed, not only for Post Real Estate Group, but ultimately for all of the investors. And if they do overachieve, then they deserve the opportunity to take a piece of that pie, right? Like they've given us these specific criteria or these projected returns. That's what everybody's comfortable with. And anything above and beyond that, they deserve to be cut in to that as well. And I think they've done a great job in how they've positioned that with their investors on this deal.
Yeah, it's a good point. They've continued to underpromise and then overdeliver, which obviously is what you want to do. The projected returns are still very strong, but I think they're conservative strong, which I just kind of made that word up, conservative strong. But I think to your point, they're not. Yeah, they're not saying, "Hey, we'll get you 25% return on this project," right? Like that is very hard to achieve. But like you mentioned earlier, they've gone 32 full cycle, and their average investor return is just under 33%, which is insane to me, honestly. But they're projecting a 16% net return to investors, 2x your money over the course of 5 years. I think it's a safe down the fairway. You're adding NOI immediately, right? Like we're going to bring rents up over the next 5 years. Like the business plan kind of speaks for itself. And so like if they can overachieve on that 16%, then that's amazing, right? Like everyone's happy. And they're obviously going to do better for themselves, which they deserve to, because the hard part of these investments is at close and now managing the property, right? We say passive as investors, right? And it's very much passive for us, right? We get our quarterly updates, we get our distributions, but on their end, they're in it day to day, right? They're leasing, they're dealing with the tenants, right? They're making sure that the community's happy and the property's operating efficiently moving forward throughout the hold period. So we're very excited about this project. We're excited that this is our first investment in 2025 and our first true partnership with Post, and we expect to have more in the future. Hey, the way they're going, they'll probably have another property in Waco in 2026. It seems like one a year, but
Yeah, I
no, we're
think
excited about this one.
absolutely. And also want to just say a huge thank you to all of the people we partnered with on this one, but also the people that invested alongside us, right? We wouldn't have been able to do this without all of you. So again, a huge thank you from definitely both Brian and myself on your continued trust and partnership as we go through providing more and more of these to ourselves and ultimately to our partners and investors as well.
Well said. And we hope this 20-minute snippet, little overview was helpful. Like you said, we'll plan to do more of these and we will be back on soon.
Thank you for tuning in to the Peak Profits Podcast. We hope today's episode was not only inspiring, but packed with actionable insights for your passive real estate investments. Subscribe so you never miss an episode. And if you enjoyed the show, please leave us a review. Your feedback fuels our passion to bring you even more valuable content. Stay connected with us on social media and visit 7peakcapital.com for exclusive resources and updates. Until next time, keep striving towards your financial goals and let's reach new peaks together.